This is John Pinelli, financial representative, talking to you today about how to determine the amount of life insurance coverage that you need. Well, basically, there's a fairly simple equation to determine the amount of life insurance that you need. And what you would do for that is you would take your liabilities that you have and then subtract your assets, and that would give you what life insurance coverage you need. Now, the liability section is very important because there are a lot of liabilities for a person that people often don't consider. So liabilities, when I say liabilities, would include things like the mortgage of your house, the future income that you produce, because losing that could be potentially harmful to your family. This is John Pinelli, financial representative, talking to you today about how to determine the right amount of life insurance coverage. Basically, to determine the right amount of life insurance coverage, you want to take your liabilities and subtract the assets that you own to sort of come up with this number, which will determine the amount of life insurance coverage that you need. Now, when I say liabilities, these are things that range from possibly a mortgage on a house to potential income that you earn for the family, to expenses for kids' education, and any other debts that you may have as an individual. So if you're the main breadwinner of a house and you're the main income producer, say making $100,000 a year, your kids have 10 years before they go to college. So you're going to want to have enough money to provide that $100,000 a year for the next 10 years, in addition to money that your kids may potentially need for college. So it's important to have a sufficient amount of life insurance coverage where if something were to happen to you, and something could happen in the next minute, because life is short, it's important to have that amount of coverage to provide in the event of that loss, so that your family can continue a relatively reasonable lifestyle. Now, the reason we do subtract assets is because assets can provide you with some sort of money. If they're liquidated, they could potentially provide a source of funds for the family. However, if you've got a house that's worth $1 million and you have $400,000 in equity in the home, you owe $600,000. Now, if you were to pass, would you want your family to have to move and sell the house and try to find something for $400,000 or rent? Or would you want your kids to still be able to live in the same house? They've already lost a parent. Would you want them to be able to live in the same house, go to the same schools, basically continue the same lifestyle? Or would you want them to have to readjust and sort of scale their life down? So it's really up to you, and it's up to the individual who's obtaining the coverage to determine what it is that they want to provide for their family in the event that they die prematurely. So this has been John Pinelli, financial representative, talking to you today about how to determine the right amount of life insurance coverage needed.